contracts. This is scheduling update here from French President Macron, who says he will talk in the coming hours with both the Ukrainian president and Russian president. Just a note for the French economy here via INSEE says the French growth could be cut by 1 percentage point in 2022 if energy prices remain at early March levels. And INSEE just continues saying the early results from monthly business and consumer surveys show confidence falling fast, and French economic growth is seen at 0.3% in Q1, which is unchanged from February. Italian PM Draghi says Italy are disbanding its COVID board of experts as health emergency ends.
Okay. Testing. Let's see how much delay we have today. Okay. Testing. Let's see how much delay we have today. Alright, we're good. Alright, the treadmill goes back on. 2.2 miles an hour. Let's see, what charts do I have up today? Okay. Alright, my chat should open up here. Alright. You know what? This doesn't seem right. This is not. This is wrong. We need to do something like this. Alright. Man, where the heck? This chat is supposed to be popping up here. No bueno. My OBS software is not working the way it's supposed to work. So I have no chat screen. Well, let's try this again. Alright, let's get that. Okay. Let's undock it. Chat. Son of a gun. Your live chat will appear here. Private broadcasts are not supported. Well, this isn't a private broadcast. Well, now I gotta look all the way on that. See, now I gotta look all the way left. I'm gonna miss this. Let's see, how else can I do this without missing a trading screen? Things that make you go, Well, that's irritating. Okay. Nope, that's no bueno. Let's see. This is irritating. That's okay. I guess I'm going to have to look all the way left to see chat. I see some chats in there. Christopher, good morning. Do you see what time it is for me? Look, 10:17 a.m. Bottom right. Oh, look at the dollar. Look at the dollar going went straight down. Oh, cool. Let's see. Yeah, market hours. I hear you. Let's see. On point 7 asks, gosh, I could barely see this screen.
I'm just seeing the latest day reverse repo operation. Accepts 1.660 trillion across 86 bidders, which rises from yesterday's 1.614 trillion.
Hold on, I'm getting texts here. I'm just getting my my daily exercise here on the treadmill. So just walking. Let's see. Do I need to adjust this? Nope, I'm good. Yeah, okay. So, when you get a chance, could you show, this is what on point 7 says, how to highlight imbalance on footprint chart? Imbalance? I mean, it's kind of what the footprint chart is doing here, right? So if you look here, let's see if I can get, I don't have a lot of my tools. Right here in the middle of this footprint chart, you see how like there's a big red on the left side? All of those are imbalances. So like the left side is delta, the right side's volume profile. So this left side's a delta profile. So anything that's red is imbalanced. Anything that's blue is imbalanced as well. But so I'm not too sure what you mean by imbalance. It says, let's see, Whale Lem Churgi says, where are your price ladder? Oh, it's on another part of the, I have two 49-inch screens, curved, and I got 227, so I got a lot of screens, and you guys don't see even close to everything I'm seeing. So, someone complained the other day that they couldn't really see much because I had too much stuff up, which I get that. So, no DOMs. But you know, the price ladder's here on this right side. You see that? You see right here? You can see a price ladder here. Shlomi, I did. Discord is no longer a thing for me. I don't have the time, my friend. And there's liabilities involved with having something run in your name. So you got to be constantly monitoring it. You can't rely on anybody else. You know, copyright and all that other good stuff. So, it is gone. So I'll spend some time on YouTube once in a while. I'll spend some time on Twitter once in a while. But mainly, I'll spend the most of my time with my family in off times. Or I'll be trading my own account during market hours. All right, a little long here, by the way. So that's my main focus. I need to be playing some pump up the jam music here. I was long from 71.25. Let's go get 'em. New highs. Little bit of liquidity sitting up there. Just a little bit of poor structure here underneath us on the footprint. Very low volume. You want all these levels to fill in on the footprint, right? With, you know, at least 100 contracts or something. All these very, very low volume areas, they tend to fill back in, but we'll see. We're up 2 points here. Woohoo. Thanks, Shlomi. It was fun. I met a lot of really cool people. And they're absorbing here. You see it on the footprint? The volume. Right here. See how it's building out? Just a little. Let's see. So it shows some conviction on the part of buyers. All right, I'm out half at 74.25. All right, you see this incomplete auction? They're still buying into it. That little yellow box that popped up here. If we get a bunch of bars and the market pulls back, this will extend a yellow line until we touch it again. Come on. Can we get the rest? Should get rid of this red area here. There we go. Come on. A little bit of news. I hear news. All right, this market didn't want to go yet, so we're going to take it off here for +2. See how you can't, my stop was 3 points. My profit taker is 3 points. That's 1R. You can get a lot of these trades if you're good at reading the market, but golly, it's hard to, you know, let's say you take off some at 1R and you take off the rest at 0.66R. It's hard to get 1R trades with really high win rates. You can get like 0.8 R's with a fairly high win rate, but I'm always wrestling with myself. Do I just take off at 1R? Let's see if it keeps going here. Might. A little volume wedge. Building volume right here. So they built volume here. They built volume here until they pushed it up. You know, they have all this consolidation, and we're starting to break to the upside a little bit here. Right here. So if you're short, you're starting to feel some heat. You know what? Let's get long again. Let's go for it. There's an iceberg seller up here. You see it? Let's see, what does my footprint show? 200. 200 up there. That's okay. Little profit taking. Top of the range. I do have LG 49s. Christopher. Sorry, I'm a little... So I'm supposed to have a chat screen with my OBS software. Right in the middle of my screen. Instead I have on YouTube way off to the left. So it's hard for me to see. So I'm going to miss a lot. Let me try it again. Chat. Yeah, it just doesn't work. What can I say? It just doesn't work. Here's what I'm seeing. Alright, it's this thing. It just doesn't work. I don't know what the heck is going on.
Energy supplies from Russia will remain stable despite geopolitical this is via Russian press. These facts.
We need to have some sort of music going. You know, if I put any really good music on, YouTube will just block the stream. It sucks. But I am in the mood to hear music or to talk with you guys. Yeah, there we go. Let's go. I don't have great position here. It's like, it's either go or no go. See if we can extend out and double this range up to, I don't know, 80? 3-point stop. Taking off. A few contracts. Let's go. All right. Lock in some profit. See how quickly you can change your mind? That is perfectly okay. There you go. Hey, plus 3,000 tick. You guys see that right there? Bottom right. I'm out right here. What? Double the balance area. That's fine. Might go further. But you notice, look at the market, right? You get a little balance area, and then boom. You know, it doesn't. If you get greedy and don't take profit up here, you're just asking to lose your profit. So I had a 3-point stop on that. So I'm out for +5. And the way I do it is I go in with a few contracts or a few sets here, ding, 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 and then I just they're automatically set to 3-point stop loss and then 5-point profit takers. And then I'll take some off at 1R. Because you know, I could win a lot with about 0.8, 0.9 Rs between there, depending on the day. But it's damn hard for me to win a lot over 1R. It's just my trading style. So I'm currently flat. We'll just see where this market goes. You're like, but why don't you let him run? Because this is the strategy that works for me in the long term. Evening, Rajinder. What's cracking, man? I appreciate your Twitter pictures. They're always encouraging. Here we go. Here's the question. Do you get short up here? After you've had, oh, you guys don't see the chart, but anyway, after you've had this pullback low, right? We came back above, held above the open, sort of the high volume node right here. You see this? That's where this teal line prints. Anyway, came back above yesterday's settlement, tested a little, right? We rejected off it the first time. So when we broke settlement, you see how we ripped down, and then there's a big buyer stepping in here with this, big circle. And we go a little lower, hold the open, come back to settlement, and a big rejection, right? So 49. So settlement was 49.50. So we went right up to it and pulled back 10 points, right, to 40. Maybe 40 and a half, whatever. I guess 9 points. And then struggle below it, back up through, testing it. Now above settlement, testing it, and now we're off to the races. Do you short up here? That's the question. Probably for a scalp, but you're now against trend. So, what's your risk? Where do you place risk? Little tough, because we're on a higher time frame, and you guys don't see the other charts. We're breaking out here. Nope, I can't. It's going to be too much of a pain in the ass for me to detach and move stuff. So on a higher time frame chart, we are, we're going for it. But that's a place you take profits. If you put up, I don't know, I'm assuming you guys all have charts. Put up a 30-minute chart and look at the last 3 weeks and make it RTH only, regular trading hours only, right? 6 or 9:30 Eastern to 4 p.m. and go take a look at that, right? You'll see all kinds of gaps and different things. So we got filled. Now we're coming up to the top of a range. This is resistance on a higher time frame. But, E-mini likes to hit stops, and there are stops right above 87. So it's this zone here. Here, we'll just change this to something like, to denote the stops, we'll say stops above. Let me go find the precise level. 86. Okay. So stops above this level. Here's what we'll do. We'll select it. We'll change it to yellow. There you go. Yellow for stops. It's okay to be in a no play zone, right? See some extreme selling here. Back into this node. This was absorptive. You see the big blue? So someone passively sold this area already. But that doesn't mean anything. The player could be profit taking. Right? What if they took profit here and they're willing to buy back here? Right? Let's say they're long here, but they're passively selling here. Iceberg, right? and they're just taking profit. And they're like, well, we're just going to keep buying this market. This could be support, right? Just because it's passive selling doesn't mean the market's absorbing it's going to reverse. Could be profit taking, and they will buy back. We might just be getting out of a little bit of a position from here, but not all of it. Maybe they just want to keep buying and buying. Squeeze the shorts. I mean, this is an index after all. I got to execute on my DOMs here. See all this volume that's building up here? Now, this volume profile is being compared to everything that's visible on this chart. All right, so this is all that's visible. These all change in length depending on what's visible. So you see there's a high volume bar here, the orange. So if I get that out of here, these should all get a little bigger. Let's see. Da, 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 da. Did they get a little wider? Oh, a little bit. There you go. Now they got narrower because of the opening, or 7 a.m. volume. See that? Because it's comparing visibly this to this. That's a good thing. That's how you want to have your footprint set up. A lot of people, they have their footprint set up. God, I see so many people on YouTube make this mistake. So many. If you have a YouTube channel and you're watching right now, and you use Sierra chart, go into the settings, right? And on your number bars, and da 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 da. All right, come on. If I can find the setting. It's always the question with Sierra chart, isn't it? Where the heck is the setting? Oh, right here. Volume profiles, bars, length relative to all visible. That way you can see like the rotations for the bars that are visible. Because otherwise, what most people have this, they have this set off, and it makes everything look nice, but it's not useful information. Why? Because you're not really able to see volume in terms of comparing from one area of the chart to another. If this is set to no, all of these per bar, you're going to see the biggest area of volume within each bar, not comparing to the whole session. Look. See? Should this be comparing to this? No. Jabbar just opened. There's hardly any contracts up here. So let's set it to yes, and let's see. Now we can actually see true rotations. Check it out. Bing! Look, hardly any volume. But you don't get the real view. So anyway, all you people with YouTube channels, Furus, out there, go make that change. Now you're going to be able to be a lot more effective on your number bars. Why do I say this? Because I've been watching some YouTube channels of people who have Sierra chart number bars, quote unquote institutional type traders, or whatever, and they just have these settings wrong, and it pains me to see it. Anyway. Could be rebalancing for next options cycle. Yeah, it could. It could. If you go look at a COT, chart commitments of traders, and look at the E-mini Reginder. Go look at exposure for hedge funds. It's in the gutter. So JP Morgan spoke to this a few days ago. So I've been long and strong, by the way. Which is global equities. There's about $250 billion. $250 billion that they estimate needs to come back into the market. If you go look at the COT exposure for E-mini, it's back near COVID lows. So if they all have to buy in, and we've only just gone sideways on equities, excuse me, if we've just gone sideways, right, and we're in a greater consolidation, you're like, what? The Fed, interest rates. Yeah, I know. But anyway, if they all have to buy back in, or they feel like they have to chase, we get sort of a lockout rally. Guess what's going to happen? We're going to rip if they buy back in. So just go look at it. It's hard data. I'm not gonna bring a browser into this. Da, 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 da. Anyway, you can see down here on this chart, right? Area of resistance right up here. Big time. All these orange lines are prior settlements, right? So 1, 2, 3, 4. These all happened on volume too. So where are we? We're right up here. Above some of those settlements. But what do you expect from people who are trapped here? Right? Big rejection as we got close to this. In this area, the breakdown point, we rejected again. Came down, double bottom. Now we're in higher lows mode, higher highs. But we are at definitely an area of higher time frame support. This is a 30-minute line on close chart, just showing settlements. This is the NASDAQ. NASDAQ slightly weaker. I actually have a NASDAQ chart up here. But anyway, what was I saying? Oh, people are talking about Fed and interest rates. If you go look back historically, and a bunch of people have posted charts to Twitter. If you go look back historically, after we start raising interest rates, or the Fed starts talking about raising interest rates, the market anticipates it typically and sells off, and then it bakes in a lot of that. And then as they start to raise interest rates, which we've seen, the market then starts to either consolidate and rally, right? Because we get a little oversold. So when the news cycle gets so strong negatively, and you see they're buying lows on volume, big money likes to buy, especially indexes on volume, you can start to maybe anticipate that you'll get some upside in equities. Right? And then go look at your put call interest, stuff like that. Nice tight little bull flag. Let's see. Into the resistance we go. Higher time frame. I'm not taking off anything. Higher time frame being not E-mini, meaning shares of constituent stocks, which I have owned from much lower. Man, I wish you guys could see these charts. Oh yeah, look at that bull flag. High, tight. Now we're going. Very low volume. They haven't decided this is where they want to sell. We might see a spurt and then a whole bunch of HFT kind of action come in. You see a whole lot of interest to buy and sell up here. Then maybe at worst we range out up here, or we get some sort of big reversal. Coming into the zone. Where does this line come from up here? Where do you think? Is that some sort of resistance level? Yeah, it stays in there because it is a resistance level.
More commentary from Ukraine, which is pretty familiar, and while the Kiev Independent, Ukraine officials say their main demand is a ceasefire and troop withdrawal. And in an interview with Medusa, a key member of Ukraine's peace talk delegation,
see the volume picking up here? So even as we're rallying a bit, right, they're selling into this. In other words, faster than you can even see, they're adding liquidity to this book. So this zone, Someone, what this yellow box means is in real time, someone very quickly sold into this level that had bids, and the market never got above that. So it has, there you go. Now it's more completed, right? Less completed. So no one taking it. There you go. Little initiative. Let's see. Anyway, what that yellow box is telling us is that there was an extraordinarily short-term aggressive seller. If it happens on a lot of volume, they can be reversal points. They can be. Doesn't have to be. Right? There's lots of ways that the price action can end in a stop run and sort of taper out, and then aggressive selling, or we can build volume right to that point, and some big seller comes in and starts hitting it, and then you see that yellow box. Anyway, look at the volume here compared to here. Again, if we turn that setting off, these are all going to look fat and big, and you're not going to be able to see the volume concentrations like this, which is how a lot of people have their footprint set up, because they look pretty. And I would actually argue it's misleading. Am I at an hour yet? When I hit an hour, I'm probably going to, I don't know, get off the live stream, because then I'll be an hour into my treadmill. That was one of the problems with the Discord, is you get on, and then people start talking, and then I can't pull myself away. Oh, some volume being built here. I couldn't pull myself away because people were asking questions, and it's an hour, 2 hours every day from my family, from myself. I got books to read. I have journaling to do. I have other trading endeavors besides a free Discord that doesn't pay me anything. Hey, there you go. What? Right into the level. I still don't think that we've hit substantial stops yet, though. Market's just grinding up. But yeah, short term hit some resistance. You could see it right there. But again, compared to the players that are long maybe from here, really haven't distributed out yet. You'd expect them to push price up so that they can sell into it and then quit their selling. If this can be a volume node, we can push higher, and they can create a range to distribute out of. If I were a big player, that's how I would do it. Hey, big positive ticks, plus 2,000. When it gets to 3,000, this will turn brighter red. It'll go, bing, notice me. Okay, right now it's maroon. We can see the ticks here, right? They're 2,200. It's this green. Same thing, right? So this is connected. 23, 22, 20. Let's see. Let's see if we go to the moon, or if that's it. So anyway, a lot of stocks are breaking up right now. Nice C tick, plus 400. That gets to 1,000. That is ripping. Oh, I see some size coming in on the NASDAQ. Let's see. Maybe we should look at the NASDAQ too. So there should be, you guys hear that news? Can you hear the news guy okay? Is he too loud? Oh, little market sweep up here. They're trying to get it above these highs right here. Let's see if they succeed. So far, only took it to here on that market sweep. Are they going to try again? So when they sweep the market, they create a little bit of weakness there, right? Because if you sweep that market and then it holds up, let's say halfway between the sweep, right? And the bid holds up, the shorts get a little rocked. That's what ends up happening. So let's see. take out 90, I think. Maybe. Maybe, baby. I think so, though. No and no? What is happening here? 727. No and no. Awesome content. No and no. What? I don't know who he's talking to. Maybe 727's short right now. It's like, no! No! I would say most noobs today are shorting. I refuse to short. Why? Big sweep on the NASDAQ. That was about 125 contracts to the upside. Here, let's go take a look. I mean, I'm watching DOM, time and sales on the NAS. But you guys can see here on the NAS, the Nazi poo. There you go. We'll have to adjust everything. Here, let's just do this. Window, ding. There you go. Now we can go here. We'll adjust this back to where we can see stuff. There you go. And there's the NASDAQ here. So this NASDAQ, just keep in mind, is aggregated. Oh, look how they absorbed here. And then once we went above, they gave up. There were stops up there. We'll see. Might be it. Little bit of liquidity up here on the NASDAQ. Little liquidity on the downside here at 506. But this NASDAQ footprint is aggregated 4 ticks, or 4 ticks per I don't know. It's a point per tick. It's a better way to describe that. So each one of these is 4 ticks, or a quarter point for each level, right? Why? It's just otherwise you get too much. You need too much vertical space. So, hey, plus 2,000 tick. Let's see if we could see this hit 3,000 here. All right, they took the 90. They took the 90 liquidity up there. You see that? Looks like they took the whole thing. Almost 224 contracts. It looks like. Let's see. 278. Oh, that's interesting. So it's not 100% delta up there. Let's see. Where is it? Nope. So about 50 contracts were sold into the level. That's interesting. So it was an aggressive seller there. Da, 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 da. So let's see what we can see here. Short term, we have 1, 2. I don't know. We're getting to a little bit of an exhaustion move up here. Soon. Definitely soon. There may be a time to short this market today, but you just gotta be patient, I think. Guess I'll get rid of this stupid chat box from OBS that's not working. That really sucks. Look at that, 3,000 tick. See that? Now it's bright. FOMO. It doesn't mean short. It means that there's a broad market move happening. Look at the nicey tick, plus 800. All right. Look at this one, plus 3,000. We're ripping. Hedge funds are like, damn it, this market's not as weak as I thought. I got a chase. Yes, you do. We saw that in the COT. So I have not been shaken out of my positions.
Quick market updates looking at the equity
I
space.
did have stops in though.
Yeah, equities do continue to grind higher throughout the session, with now all major US indices at session highs. The EMI S&P up 1%, whilst EMI Russell 2000 does remain the outperformer.
I wish you guys could see this hourly chart. Maybe we'll bring it in here. All right, let's do this. Let's detach it. Oops, and we'll bring it into the screen real quick. Let's see how quickly we can do this. You know, I'm walking on a treadmill. My fingers are, oh jeez, bouncing around. Well, that was messy. All right, here we go. Ay, ay, ay. We'll go show this title bar so it's a little easier. All right, here's the hourly. Wah, wah, wah. Come on, come to the bottom. All right, should be filled in nicely in there. Yeah, it's filled in. Okay. See that? This is where we are. Is it resistance? Sure it is. Right? So this is the area I was looking at for stops to get broken. I think we've got them just now. Higher time frame. So today, next level, 4403, 4400, I guess we can call it. Or we pull back a little here. I'd bet on a little pullback. But, you know, go look at your short-term charts to see that. Here, anyway, now you can see this. It's not an hourly. It's an hourly chart book. That's how I have it called, but I'm using a 30-minute. 30-minute chart. Why do I use 30-minute? Oh, it shows the closes nicely. So then I see the gaps really accurately. Okay, let's attach it. Window. Attach. Ding. Oh, really? You gonna do this to me here? Oh, that sucks. Trade window. Chart. Show title bar. Okay. There you go. Hey, here's a pullback. Uh-oh. See the orange? All right. Time to get a little short. We'll add a little up here. Higher. But you got to get in. If you see something, chances are other people see something. A little bit of volume, a little bit of profit taking. Maybe we'll turn it into a range, but we might try. What ends up happening is you get one little fail breakout, and then you got to see if we come back into range. If we come back into range, at the very least, we'll probably have a range. We'll see. Why not take a shot? What? J-Trader, Lord of the Skies, you're retracting messages. What? You know, in the Discord, we didn't allow retracted messages. From the contributors, you retract your message after making some kind of prediction, and maybe in your case you didn't, then I didn't want any part of you. I'm like, be wrong when you're wrong, be right when you're right. Because, you know, if you make a call and you're wrong and you can't admit to it publicly, then you're just lying to yourself. And it does nobody any good. Let's see if we hold up here on the orange. It's not a big, so it's just a short term. So here's what's interesting, right? This is context. You see this? This is a big buying bar, right? Lighter. This has got orange, right? This is relative to the whole session, but it's a low volume bar, right? So this right here, I don't know if you can see it. Let me move it up a little bit. This says bar volume. So this top line is bar volume. The lower one is volume per second. So here you have very low volume, low volume, low volume, and then you have a concentration of volume up here. So after all this low volume move, boom, big concentration of volume. Now it could be buying for more highs, but it's a little telling that a lot of volume came in quickly up here. One of the problems with being just a little trader is you try to follow the breadcrumbs, and you don't know if they're going to just not take profit and keep buying. Some large institutions may have, well, not may, likely have something that measures, shorts getting squeezed much better than any of us. So, on that 30-minute chart, kind of broken out, we're moving straight up here. A lot of volume transacted near the lows. That's what happens when markets really rip, is the smart money buys at the lows and then they wait a long time to sell. And so they soak up all that inventory and they just sit on it. And you and I are left wondering. And then we just we try to follow the breadcrumbs. Come to Papa. I told you guys I was adding in here, so come to Papa. So you get below this low here, right? You get below this candle low, you're going to spit out some stops here. But we'll see. We'll see if there's enough sellers. We still have high ticks, broad market participation to the upside. Uh-oh. Below this volume node here, let's see. If only markets did what I wanted them to do all the time. It's just not how it works, but it might work this time. Let's see. Uh-oh. Here we go. Pay me. Yay. Not enough. Not enough to get paid. That sucks. So now, if we look at these two candles, you see that the volume profile is useful for knowing this is what the volume looks like up here, right? This and this are now aggregated here, because this is the first time we've been here all day. So now we get to use this right-sided volume profile. Same with this, right? So what do you think? Do you think over time we fill in this node down here, right in between? Sure. And maybe even down here to 82, 83. Now I'm getting paid. There you go. A little more. You see how this yellow box exists on the downside and the upside? There's aggressive sellers and aggressive buyers here. It's going to spit down a little bit. Oh, there you go. Fully paid. +4. I'll take it. My right corner screen. Sorry, it's not my right corner. My brain has to. Well, it wasn't a prediction. Oh, that's cool, man. I like it, G Trader, Lord of the Skies. You have a great name, by the way. This right screen, which is my middle screen, and a bottom monitor, is this red line, is the E-mini, and it's a line chart. So I find line charts to sometimes really tell us the trend. So it's a line chart, and it means it's line on close, right? So maybe price went lower here, but wherever it closes on a 30-minute basis, you can see it's 30-minute, is how it's going to show the prints. And then the orange lines are settlements, and you can see it's right there. Yeah, let's go downside. I love it. Oh baby, Topping pattern. Let's go all the way back to 79. All the way down. But we got 10 SMA here. 10 SMA happens to line up with this volume. But here's what's telling. See, I get excited. 1, sideways. 2, sideways. 3. You notice how the impulses are getting shorter? Big impulse. Pretty big impulse. Smaller impulse. Into what? Higher time frame resistance that I showed you guys earlier on the 30-minute chart. I'm not moving that chart over again. That was a pain. So anyway, at worst, everyone's like, I want to short now. No. They bought this a little bit. Don't short. Look. Well, this might even be retail. Getting trapped here as they buy the dip. You know, retail likes to buy after it's so obvious it's going up. So on the pullbacks, big money sells into them. And then they take it further than retail thinks, stops them all out and take it the other way, and then retail chases right about when it looks bullish, and then they sell into them. This is the way. This is the way. So anyway, all right, shows momentum loss up here into high time frame resistance. By the way, this is an imbalance right here. This blue line. It's really faint. You notice how it was resistance? Stop whispering like Biden. What? Did you just say I'm like Biden? Saberfly? That dude's a little bit, oh, I don't know. Not so lucid. If you want to say that again, I'm gonna silence you, my friend. I actually don't know if you're talking smack at this moment.
That is the foreign policy sergeant, senior US defense official.
This is not Ninja Trader. This is Sierra Chart. Jay Morris. Saberfly. If you are talking smack on my own channel, I'm going to silence you. If I'm whispering like Biden and you're joking with me, that's fine. The whispers? I don't even know if I'm whispering. Yeah, I appreciate the picking, I guess. Hey, look at that 10 SMA bounce. Look at that. This yellow line is the 10 SMA. See this? 5-minute 10 SMA. In a strong trend, it always acts like support. I'm going to range out here. Let's see. So the normal thing here, so have you look at this volume, 1000 volume chart, is to kind of do something like this. It's just the normal movement, right? So you go about, oh, I don't know, around the 50, and then you pull back and continue with trend. Something like that. That's the normal thing. Might go a little higher. Right, notice how there's a big seller up here now? Look at that big blue, circle. Charles, I don't know. This isn't Linux. But according to traders who have been using Linux with Sierra Chart for a long time, and those traders are slowly convincing me to move over to Linux, yes, it does work very well. There's a thread on the Sierra Chart support board, and if you just Google Sierra Chart Linux or something, you'll find the thread, and there are people who are apparently Linux. I have never used Linux ever, so I'm reading up about it right now. I'll probably end up dual booting. In other words, installing Linux and partition, because I've got a big internal sort of I forgot what it's called, S something 2 kind of, fast hard drive. I've got a really big one, so I can easily partition it. And this machine's only for trading mainly, so the problem is I use a lot of little programs like Elgato Stream Deck, and apparently there's an interface that'll work with that. But then you run into all these other issues where other programs, you have to just make sure that for what you're doing, you have all the programs you need. And I'm not a coder at all, so I don't want to spend hours every day messing with trying to figure out how to make it work. As someone told me or suggested, it'll probably work out of box. And so if that is the case, great. If not, well, I'll go back to Windows. All right, this is about where you would want to sell, because you've got this volume node here. So if you got long here, you sell for a little profit, and you see how the market reacts. If it goes higher, all right, you hold on. If it goes above here, then we're on and cracking. New highs. Right. So far, right, you have this here. Let's get rid of this. So far, so you got to just give what the market, take what the market's giving you. So far, oops. Wait, did that not? There it is. Right. So far, the market's come right back into what? This range here, no problemo. So we'll see. May have just hit stops here. It's a thin market. But, if you're long above 10 SMAs, you take profit here and then you wait. Maybe your stop is down underneath this swing low here, right here. At, let's see, 86.5. If you got long around the 10 SMA coming into it, right? So maybe your stop is break even, but then it's a structural stop. Little tight, but if you're scalping, day trading, which is a lot of what I do, then this is what you do. And if you got long in here and you got out into this volume node here, well, then you probably are pretty good, right? If you got out in 86 and you have a 3-point stop, 83 is down here, right? 86, 89's here, so that's 1R. See that? 91. You see how you get your 5 points? Hence why 3-point stop, 5-point profit taker for this specific volatility. All right, you got to adjust that. Very, very important. A lot of traders, they remain static with their targets even as volatility changes, and then they just get absolutely shredded by volatility. So then they end up complaining to all their traders, oh, I was right on my trade, but I got stopped before I was right. Yeah, markets are hard. So you got to adjust to volatility. So let's see. Let's see. Might have went just a little further here. Let's see if we make a new low. You should be wary, though, because of this move and because of how it lost momentum. And then, like I said, on the 30-minute higher time frame stuff, you got to think all those people that were wrong and up here and all those settlements, they're now going to start getting out at break even. So what's that going to cause? Higher time frame, selling. And then people who sold here that saw value, there was volume at highs. All right, absorptive volume at highs, that closes. So all the folks that saw value are going to see value to sell here again likely. So we'll see. Hence why we can kind of infer, at worst we say, what do we say? Maybe a trading range, but it'll keep you from buying this pullback when you kind of look at the bigger picture. Does that make sense? Now here we have this coming back to the zero line. Oh, we broke the lows. Now the longs give up a little. And what do the longs have to do to give up? They sell. So what does big money do at the lows, new lows? They cover their shorts. into those weak longs. So let's see. Hence why it hesitates here.
Just a bit more commentary from UAL. He says
So
that
support right in this
70%
level, maybe.
higher than 2021.
Right
This is
here.
near 2019 levels.
What? Because if you were short from here and you were wrong, this is probably where you want to get out. Here we go. I am getting a little long. Scale in. So what's now resistance? Here. There you go. And here. And what does this happen to be? About 50% retracement? See how this works? If only trading were so simple. Yeah, I know, it's usually not. All right, cut this in half. Just take a visual on it. Here, we'll erase this drawing. All right, the visual is that red line. Oop, back in. Notice though how this type of thing, it ends up becoming, look, see that? So you have 2 points up here. So this is roughly the area of support. So what ends up happening a lot of times is it turns in like this, and then sometimes it keeps going. So it turns into a big old bull flag. You're like, what? Hey, we got to do whatever we can do to try to be predictive with markets according to how they usually move. So anyway, it's a consolidation, right? Shorts were wrong here. So it's potential support. Why? Shorts have to cover at break even. So we wait for them and we buy against them. And we always define our risk. Always. That's for you to define based on your account size and what you're willing to trade. But anyway. An hour and 20 minutes. Let's see. Maybe you guys will see me get out of this trade here. Or hear me. You're not seeing anything, are you? Anyway, look at the footprint. Little volume here. Back in. See the volume here? Here, we'll put a little line here. If you were short from here, how are you feeling? Did you get out short term? Did you get stopped here? Or did you just hold and pray? It's close enough on a higher time frame. You're just hoping and praying that it doesn't just rip. I'd bet that most retail traders just took a big underwater hold here. And as it comes back through this area, they're like, I'll get out at break even. Da da da. Yo, lucky prod. Guys, my chat is way off to the left, so I'm missing it in real time a lot because I'm forward looking. There's an iceberg right here in the market, by the way. Rut row, you see it here? Someone's buying passively. So let's see if it pushes down, and then they push it back up. And everyone who shorts under the iceberg gets quickly caught with their pants down. Let's see. I see some questions, but instead of answering the questions, I'm more concerned about looking at this market. So I'll get to them maybe. Quit whispering like Biden. I guess that's what I'm doing. Maybe I say stuff like that. Okay. Uh-oh. Biden talking more smack. Can the U.S. just quit being the policing nation? Oh, I shouldn't talk politics. Sorry, poor form. I'm so sick of the U.S. doing what they're doing. Okay, trading. Come on, let's pop. There you go. Come on. Come on, a little more. There you go. There's my 1R off the table. All right. Not worried right now in the slightest about having even a break-even trade, by the way. That 1R is, yeah, it keeps me holding the position for longer from getting squeezed. But I always just take 1R up. I kind of want to build a position in that green area here. And then what's below it? Let's see. So NASDAQ right here too. NASDAQ came right down to it. See that? And I like this iceberg setting up here with volume. So if we push lower, take out stops, we got the 20 SMA rising here. Then we get a springboard. We'll see. You know, markets love, people love to take profits in the markets. Man, that is so weird. That is so weird. I need to adjust the colors here. About halfway. Look. So here's a little above the 50. So we'll see if we can get, so this is some sort of flagging consolidated. We can get a breakdown right through here, and then boom. But we'll see. You got to be willing to be wrong. Right? What about halfway? People love to play about the halfway zones. Right? Go a little further, and then bing. Oops. Just depends how we set up into those zones. Let's see if we can take a 5-pointer if we break upside here. About here, 87. Yeah, we're going to rip stops. Let's see. Little higher. Little higher. There we go. Come on, can we get the iceberg here at this level, please? I want to see if the market moves that way. All right. What is it, about 900 contracts almost? Now, people are buying with that iceberg, so it's not just one player. Because undoubtedly, I'm not the only one that's seeing this. A whole bunch of you guys are too. I'll get to all the comments, I swear. I just gotta focus here. I'm looking straight ahead. If OBS was actually printing my YouTube chat, I'd be good. I'd be able to see them and I could talk, but otherwise I have to move my YouTube and cover screens that I don't want to cover. Not good. Thought about putting a TPO chart in today. I think the TPO chart today was very telling. Very telling. I'm out. I don't want to be part of this market. You can go up without me. I see something on the TPO chart. Oh, there it goes. These MFers, I feel like they always wait for me. You guys ever have that feeling? Like, they sold, pump it. It's the worst feeling. All right, now I can address the YouTube comments. And I'll watch this market. I'm going to bid under it. But anyway, let's see if the 10 SMA is resistance. You see this 10 right here? And then we've got a little volume, We'll see. It's okay. I think we're going to pop lower. And if I think we're going to pop lower, then as a trader that just takes what the market gives them, I've got to make a decision. I can be underwater down here, or I can just take my profits and then watch what the market does down here. So that's what I'm going to do. Anyway, comments. Da, 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 da. Charles, yeah, well, I'll let you know if I do. Again, I'm probably going to dual boot it.
Just going back to your comment from US Secretary of State.
We'll see.
It says Russia may be planning a chemical weapon attack.
Oh, jeez, they're talking about chemical weapon attack. Did you guys hear that? Jeez. I don't know how much is propaganda about, all this stuff. Anyway, still, do you think the market's going to like that? No. Timely news, timely news. And yet, there's ice, and it's broken. And I made the right choice. And here we go. Let's see if we come back up. Let's see if they buy above. You see how quickly we pop back up? Let's see. Let's see. Someone's selling passively here at 82.75. You see that? Quick volume right there. All right. Now let's see.
LME here does note that it restates the daily price limit for all other base metal contracts at 15%.
All right.
Nickel to be at 12%, whilst all other
Let's see.
base metals are at 15%.
Lots of volume building quickly here. See that? You see the volume per second spike here on that down bar? 50 contracts a second average. Now we're up higher. Shorts are covering from here. See the aggression? Get out at break even. Yep. Bing. See how I'm careful not to tell you where I'm long or short from? No signals for you. Well, a few. Anyway, back to the questions. Let me get to them here. Well, first, let me see. So here's another point of resistance. So I'm focused on trading here. So here's another point of resistance. So this is consolidative, right? All right, we got this. You see that? So where's the breakdown in this candle here? So if you're long here, right, where are you going to be trapped? If we come back to here, you're going to feel like, well, shit. Sorry, language. I was wrong here. Let me get out at break even. So that'll likely be a little resistance. If we push right above it very quickly, right, then that tells us something about the nature of the longs in this consolidative zone here. So anyway, just saying. I think I'm done buying here for a little bit. We'll see. I would want us to break some of these levels. You gotta see certain action here. There you go. So there's some aggressive selling right here. 80.75. I'm thinking about the higher time frame. All the people up here. That's what I'm thinking about. And the fact that we are in a market that is not yet on the daily time frame. Let me go look at the daily. Nope, it's not trend up. Still lower highs on the daily. So important. So got to be conservative until you start making higher highs and higher lows. General Dow theory, right? Trend. So using higher time frame right now to inform my low time frame decision making. You can see I've already taken a few trades up here, but they're scalps. But now, after a certain point, just using momentum loss little tricks here, maybe a little bit of Elliott wave, which I'm not explaining, but that's okay. It keeps me out of buying a pullback market up here. These little tricks will, big picture tricks will keep you safer in the market. Big volume here. Look at that. 81s. So think about it. Shorts wanna, now who's selling here, right? So you got to think both sides want to get some sort of compensation, but who's likely on one side or the other based on prior structure? Here we go. See how it printed in orange? So it's possible here that short term, these are a bunch of shorts getting out break even, and someone's on the other side selling. It's possible. But to make it more confusing, they usually let it bounce, and then a loss of this node can tip you off to get short. But that would be the my rotational thesis, is that the shorts are covering into folks that are selling. And we've got some negative news on the wires right now. So there you go. All right, so let's keep it moving. There was an interesting question. So where are we in? We're in the Goldilocks zone here? Yeah, we are. So there will be some covering. Almost guarantee we'll get some volume here. Why? See this? Value area high. That's what this blue line is. You see it? VA volume, VAH, value area high right here. It's also big volume. Little volume breakout. So what do? They like to cover into these areas. Let the market get weak and then cover. So let's see. And you got to distribute out of this area too. All right, because for every buyer there's a seller. So let's see. Straight back up. Let's see if this becomes resistance. So a few things going on. Higher, bigger picture around the halfway mark of this pullback. Shorter term picture, volume, right? So the bigger picture is we probably get a little bounce. Shorter term picture is we got resistance here. So you see how you get like little conflicting kind of signals sometimes? If that exists and you don't have the kind of bottom with huge volume taper, then you don't have to be in the market. You could just say, it's not my setup. Or maybe you like to blindly buy every 50% fib. I don't. Anyway, back up here. Rob says, is the reason for the low volume because of rollover? Certainly causes lower volume. But let's see, how many contracts? I don't know how many, let's see. EPM. You know, I don't have EPH up. Here, I'll get it up here. Hold on. Symbols. EPH. Add. What's my symbol? F.US.EPH22. Close this. So on M contract, we have almost 1 million contracts today. And on H, we have 300,000.
Just breaking away from constant blinking here. And on the energy front, Saudi Crown claims the Japanese PM did speak on the phone and they discussed developments in Ukraine, and Saudi prince stressed the importance of maintaining the OPEC Plus agreement. That's via Saudi state media.
I gotta look at oil here.
Just worth noting, we have heard
I trade oil. It's not on screen. Hold on. Broke out. Is it going to hold the breakout here? 103.30. Let's see.
I'm just seeing WTI settlement here. That's up $7.94.
Anyway,
$2.98 a barrel. That's WTI settlement.
there you go. Settlement on oil just now. Oil should be on K. All right. Oops. All right. So next point of resistance here, 84.50. But remember, we had what? An iceberg here. So everybody that shorted in to this iceberg, once it goes above that level, right, that player potentially could get paid. We'll see. We will see. Anyway, back to the questions real quick. So Mess User says, what level of trader do you feel your channel caters to? If I maybe at a 3 out of 10 with trading experience, is there a best place to start viewing with your videos? Thanks as always. So Mess, MES User, I don't know, man. I have a lot of YouTube videos, so on Sierra chart, so that's a pretty big folder that a lot of people have come here for, just to learn Sierra chart. So in terms of training up traders, I don't have any systematic anything. I just have a whole lot of discussion of markets, and I'd say a lot of the better stuff is in some of the longer live streams where I'm just talking about the market, and maybe I share like my trading routine, how I'm looking at the market. But in terms of it being really organized for training up of traders who are just starting, I definitely wouldn't say it's like 1, 2, or 3. I'd say it's like somebody who's a little bit familiar with the markets and terminology. Again, that's a little tough for me because I don't talk about the basics that much. I interlace what I'm saying with the basics sometimes, if I feel like it'll clean up the basic understanding of something. Here we go. In hindsight, great place to buy, huh? Underneath into this golden zone, right? The golden fib zone, we'll call it. You see it? We'll put yellow on it. So the golden zone is here. Anyway, hindsight trade. I really don't like, I am not a huge fan of buying markets and continuing to trade after I've had a whole bunch of winners in a row. It's good to just let the market play out and try and figure out if the market's strong or weak, or if it's moving based on news, etc. That's my personal style, but I know people that will continue scalping all day long. I don't know. I'm happy sometimes trading once a day, or even if that, and then some days I'll have like 10 or 11 trades. But at this level, where the market is not just purely trend up for now, it's getting, these major impulses, and now we're pulling back with some nice bounce. I'd probably do 2 or 3 point scalps if I was going to force myself to trade here. But anyway, what am I talking about? So MES users, I don't know. I think my channel maybe trade. If it's 10, pretty much a lot about market profile and footprint, and a lot about futures and order flow terms, and what ask and bid volume is, and how to kind of interpret or not interpret deltas on certain days, right? If you know a lot of the terminology about the market, you generally know support and resistance well. You have an idea of how volume profile works, or a very good idea, then I'd consider you like a 7 or an 8. And so I probably cater to someone between like a 4 and 8 or 9, something like that. I don't know. A lot of mixed content, I think. So on one hand, I have the instructional things for Sierra chart, and then on the other hand, I have videos where I talk about settlement and candlestick structure and how to read footprints and, you know, how I set up my time and sales and DOMs and what I'm looking for. So it's a lot of mixed content. Anyway. Shlomi says, did you code your own buy, sell, imbalance study? No, you just... So, first you need to learn what bid and ask volume is and understand that. And then you just go into something like, I don't know, if you're using... Shlomi, are you using Sierra chart? Maybe you're not even here anymore. We'll see what kind of delay I have on this feed right now. Oh, an hour and 45 minutes. I'm still talking. But I'm going to be gone soon. I'm going to eat lunch, come back to the markets, trade in peace. Then work on maybe getting Ubuntu set up. Okay, so he does have Sierra chart. So let's just say you go into a study and you do like volume. Let's see. Hold on. Volume at price threshold alert version 2. Go ahead and add that. Right, and then your input value is, you see this, bid or ask volume. So you get that set up, and then your volume threshold. Maybe you do like a 500 bid volume. So bid volume is the volume that hits the bid. So you do like a 500 volume threshold, and then you draw maybe an extension line from that area. Or you do this, draw an extension line with a transparent range. There you go. And you extend it out, right? Then you go over here, you go to the very end, oops, and you do extension line properties. You go like 4 or 5, and you change it to like, I don't know, what's bid volume look like? Red? For me it is. Right, so then it'll extend it out anywhere there's imbalance there. What else do you have to change here? Maybe do like 5 days of calculations. I don't know. Draw extension lines until the end of the chart, right? If you want to set this to yes, then even if price goes through it, it'll still extend through the chart. Then you'll know where all the imbalances are. But if every time price goes through it, you want it to cut off right where it touches, kind of like naked volume point of control. Right, there's that setting for the point of control in the volume by price studies where you want to like extend it until future intersection. You say yes, right? This is sort of the same setting. Draw extension lines until end of chart. So if this is no, then you're basically saying that it's until it intersects. Anyway, so this is where you do it. And then this volume threshold, right? Let's just say that this is bid volume. You may have to change this to like negative 500. I don't know, it's been a while since I did it. Play with it. Anyway, it's not a Sierra chart tutorial today, so we'll cancel out of that. I don't think it's still in there. Let's see. What? Yep, it's gone. Okay, cool. just in case I made changes. Footprint, center bar, red, blue. Okay, save all. Let's make sure. All right. All right, let's go back to our 5-minute chart way over here on the left that you guys can't see. 1, 2, 3. Yeah, this market might even come down to 43.60. I'm just looking at my 5-minute chart now. Huh. It's good to zoom out sometimes, huh? Oh, jeez. A little too zoomed in. Anyway, but that's what these are. These are imbalances right here, right? You see this one? I guess it kind of worked. See how, let's see, this one is an imbalance. Oops. Up here. You see that? No, that's just me. I put that in as resistance. You guys remember that? I put it in as resistance. Notice here how this taps out as well. You're like, but what is that? I can't tell you. Sorry. Certain things I got from others, and until they say, yeah, you can share that, Mike, I won't share it. So the settings of this and how I get this, I won't share it until they say it's okay. But anyway, it was a good point to short. Stop above the high, right? So let's put a little risk reward tool here. We'll make it a short. We'll put it stop above the high. Oh, where's the high? Right here? Okay. You're short from the bottom of the red zone. So let's say not advantageous. Like, well, let's not hindsight trade this. Let's just say you got in right at the bottom of the red. Where's 1R? Right here. All right, so you can get 1R. So what's the stop? Oh, let's just do this. The stop. So the entry is 85.20. So you get a point. Let's see, 1.75 point stop. So let's just say you have a 3-point stop loss, right? Because that's how we trade sometimes, maybe. Your entry is 85.25. Can you get 1R out of that? Easy. Easy. Now, where would you want to take off here? Probably at this candle's high, right? So around there. Now let's go adjust this for 3-point stop. Let's see, entry 85.25, stop 88.25. There you go. There you go. 1.08. That'd be a realistic entry if I wasn't talking about not trading. But anyway, we had shown that this was an area of resistance. Why? Same here. Why is it pulling back right now? Because again, there were traders in this area that likely got long. So when it comes back to middle of the range, they want to get out, break even. So what happens? Market participants let them get out, and then they try to buy it back on pullbacks. But what are we doing here, right? Short term. Just let's go look at the markets. It's real interesting. Look here. Like, what are you doing with all these Fibonacci tools? Mainly just want you to look at the fact that markets typically pull back about halfway and then go, right? Such a common thing. But you know, at tops, like the market, everyone's bullish, right? Because it's been so the bounce is big. But then as we start to get into trend, the pullbacks, you know, become less and less. So anyway, this is about halfway from here to here, right? And then you have this pullback halfway from here to here, right? Pullback. But now we're breaking trend lines, so whoop, right through. This is not a lot of consolidation, but a lot of consolidation here. So where do we pull back? Right into the red zone. You could probably take it somewhere in here. I don't know how the market moved through this area, but you won't be right as much as if it's a big consolidation like this. You'll be right more often. So anyway, without using too much curve fitting, you know, you're going to be like, BS, that was all curve. No, it wasn't. Just saying. This was established as a shortable zone. Stop 3 points. Can you get at least 3 or 5 points out of it? That's the question. Can you get at least 1 R, and can you win 75% of the time if you can read market structure well? You should be nodding your head. Yes, you can. BS. Show me your stats. No. I'll just show you in real time. Better than stats. I'm explaining to you ahead of time before it happens. How about that? You don't get to see my stats. Okay. We'll get rid of that now. There's a great thread on the Sierra Chart support board. There's this guy there, Markalon or whatever. Go check it out. It's pretty funny. It's a guy trying to sell his handy dandy HFT super indicator, and he's really trying hard to sell it. I don't know if it's good or not. I don't know. Maybe you guys, he's doing a free webinar. Maybe you guys should go check it out. But ask him to show you how he trades with it in real time. Just like what I'm doing here. So, by the way, look at this. Little inverted head and shoulders action, right? See that? See how we start to make, right, a head, now lower highs, now we got this neckline, now we're starting to trend up. It's a good sign. It's a good sign for an uptrending market. I'm just saying, don't be stuck in your I want to short this market because of higher time frame. Let the market speak to you based on basic structures. Right? We're making higher lows and higher highs barely, and now a much higher low and a higher high. So, you know. Trading gets a lot more difficult as we go through various parts of the day, I'd argue. 11 more minutes till power hour. Volumes start to pick up. Anyway. Still generally higher lows. This is a sustainable pullback in an uptrend. Alright, back to the questions if I have any at all. Lucky Prod. Mike. Reno. I have a question for you, Mike. Have you played around already with the time and sales volume study? No, I haven't. What is that, Reno? Shoot me something on Twitter if you don't mind. Software for news, bottom left corner, is Think or Swim. I don't just use that. I've got some other things going on too. For every buyer, there is a market maker, says Lucky. I agree. HZ Meister says, would you consider streaming like once a week? You're by far the best trader on YouTube. I don't know about that, my friend. I haven't watched them all, but I would highly doubt that. And lucky few who watch you could. There are only a few. 20 people. Only 20 people. It's really interesting. It's good. It's good for you guys. I just enjoy doing this once in a while. I can't commit to really anything. I mean, so this will go as a saved thing. But I would like to do some sort of educational thing on Sierra Chart or something like that. Or I really want to do some sort of presentation on settlement and how to use it correctly. All right, I think that would benefit a whole lot of people. Because, you know, as traders, here comes one of those rants. As traders, we should be looking at things like where are there a lot of transactions occurring in a short amount of time, right? Volume. So there's interest. Well, settlement is where that occurs every day, last 30 seconds. Hence why I have it on my chart, right? You see this ES T+1? That stands for the E-mini, T+1, right? Yesterday's settlement or a settlement that recently occurred one time ago, essentially. And then this SVol is settlement volume. So that's the volume that transacts in the last 30 seconds on the E-mini every day, which is used to determine settlement. So settlement for the E-mini every single day is VWAP, volume weighted average price, of the last 30 seconds rounded to the nearest tick, right? So if it has tick increments of a quarter point, and VWAP is, let's say, today, 43.87.12, what's settlement going to be? 43.87. If it's 43.87.13, settlement will be 43.87.25. It'll round up. Doesn't that make sense, doesn't it? So, I have that calculated in real time, which is, you'll see over here. See this orange? That's settlement. You see how much time that takes? 12:59:29. Right? 12:59:59. Relatively, so this is a volume based chart, right? That's yesterday's settlement. Look at how much volume, look how much time, or look at how much space from left to right this takes up, because there's so much volume and so many volume bars printing. It's 1,000 volume bar chart, meaning every time 1,000 volume is transacted, a new bar prints. So that's 30 seconds of time, right? This is not like equal time down here, right? This is printing according to volume, right? This does tell you the time, but it can tell you, hey, a lot of volume transacted, a ton of volume transacted here. So do you think it'll be important? That is the question, right? In the overnight, look, we center around it, we come back, test it, rip, bounce, up, halfway, right? Back through, woo, get everybody below it, right? They're ghouls, they're evil in the overnight session. So, right, we test it again, we rip through, boosh, gets everybody below settlement. Comes back up to settlement, to the tick almost, bounces back, resist, back up, but doesn't go quite as high. Comes back through, not quite as low, right? You can just see settlement is quite reactive, not even in hindsight. So what you can end up doing is you can take first touch trades on settlement all the time, right? So the first time we touch settlement in a market that's extraordinarily bullish, you'll typically see what? A bullish reaction, especially if we had a trend day and we trap shorts all the way into the close where there's no pullbacks. So market context. Anyway, so it tends to matter, right? And then you see this blue line, it's opening 30-second volume of the E-mini. Why? Tons of volume transacts there every day. The first 30 seconds, same with the NASDAQ. Look at the NASDAQ for today. Look where it bounces. Look here. This is a 500 volume chart, so we're not seeing enough. Anyway, is it support? Is it resistance? That's the question, right? You see, here's the open, down, back up through it, resistance, finally bring, holding. It's essentially almost the open, right? But what do we like to do? We like to weight things to volume. Because what? Volume is what makes traders trapped en masse, right or wrong. These are basic things about the market. But if you can simplify how you think of traders as being, well, they're trapped here on first touch, there's still shorts trapped. Okay, well, I'll play against those shorts. I'll buy as the shorts have to cover. Maybe that'll propel the market away from that zone. If you can anticipate based on prior volume what's going on with shorts, well, maybe now you can become a really good counter trend scalper, right? And if you like to go with trend, as we bounce up, we lose momentum, maybe halfway up on a bounce or something, like here, halfway up. Well, maybe you are like, hey, highs, lower lows, lower highs, lower lows. Well, I want to be going with the trend. Well, maybe you should take a short about halfway up here. Prior structure becomes resistance, and you wouldn't be right for a new low. That's fine. That happens.
About 9 minutes ago, noticed that JP Morgan has processed interest payments sent by the Russian government for 2 of the country's bonds. It says
Just listening to news.
$117 million in coupon payments to Citigroup, according to a source by the Financial Times. That is fitting with separate sources, just like we're getting more confirmation that that's gone through.
Anyway.
JP Morgan.
So, you know, you can use, but anyway, I would like to do something. So someone asked me, would you do this at least once a week? You know, I got rid of the Discord because I was spending too much time on there. So, you know, 2 hours every day on top of my own trading routine, not sustainable. And I want to do other things with other traders that I know. Little projects, big projects. So something had to go, and unfortunately, it was all the good people of Discord. So you know, I had some brothers and sisters over there. So I'll stay in contact with all those people by email, but I can't spread myself so thin. At the end of the day, I'm not gonna regret spending time with my family. And say, oh, I could have been trading. Hell no. Been doing this for more than a decade. Rather be spending time with my family. I do all of that because I love them, and I love trading. It's fun, but you know, I don't want to spend a bunch of time educating other people at the expense of spending time with my family. So I am super firm and don't care at all that you know, putting in a lot of time or not putting in a lot of time will maybe not cause other people to grow as much. It's only fair. People are very entitled in the world, right? They're like, you help me, therefore do something for me. Well, it's not how it works. There's just no great way to get a hold of me now. Used to be Discord, and even then I turned off all my DMs. I have all my DMs turned off on Twitter. I don't check them. If you have DM me in the past, I don't look at them ever, because there's way too many people have DM me in the past, and there's probably 100 unopened DMs in Twitter. I just don't check them. I don't have time. Rather hold my 2-month-old little girl that looks just like her mama. Beautiful big blue eyes, sweet little smile. Anyway, hang out with my 4-year-old boy. A lot more fulfilling than trading. Let's see. So anyway, I'll go back to the comments real. So Saberfly says, what is your trigger for entries? Overextension with stalling at key levels? You know, that's like asking a pro basketball player, hey, what's your only trigger for taking a shot? Obviously, he's going to take a shot at the end of the game. Shot clock's running out. He's going to take a shot if he has a breakaway layup. He's going to take a three-pointer if he's a good three-point shooter. If he has a decent post-up game, he might up-fake, step through, hit the little baby hook, right? There's a lot of different moves in the market. So I've just been talking about all the various things that give me criteria to enter. So asking a question like that, like what is my criteria to enter, is like you're getting it. You've gotten it the whole stream. So I'm not sure exactly how to answer that one question. It's a little too broad. Gotta watch, listen to everything I've said about the market today, and you'll hear how I'm rationalizing where I might be taking opportunities, where I took opportunities. The market is an ever-evolving, ever-changing thing. Then the more that you try to hold your opinion for too long, the more you're going to look like a fool. You need to just be going with MGI, market generated information. But that also means that you have to have a good context machine rolling in your brain, right? How has the market changed? So I personally like to look at rotations with footprint, right? And theorize on that. But I also like to look at bigger market structures. I like to look at classical charting patterns. I do have a TPO chart up right now that I'm not talking about because you guys can't see it. I have a daily TPO chart up of the NQ and the NASDAQ and the ES. I also have a weekly one up for big context with all kinds of levels. It's where these red lines come from, right here. Right? Not that one. This big thick one comes from my weekly TPO chart. Right? Anyway. There are no bad questions. That's okay. I have 5-minute charts up that you guys don't see. They're candlestick based. Volume profiles. They have value area highs and lows and settlements on them. And VWAP. POCs. Opening 30-second volumes. Right? 10 and 20 SMAs. Those are the things that I use. They work for me. But some people use 50 EMA, 5-minute. I use 10 and 20 period moving averages. I like them. Sustainable markets that go upside bounce off the 20. Very, very strong trending markets ride the 10 SMA. Let's see. Let me go back to the comments here. Aviv Ben says, are you using Lee SC Zone? No, I don't use anything custom. I don't buy anyone's indicators. Aviv. Nothing custom. Not a thing. I have all of Zip's stuff, which I highly recommend. That's Atkins Indicators. He's got a forum. He charges. I've got all his stuff, but I'm not using any of it right now. I just use out-of-box Sierra stuff, but he has got incredible value for the money. So if you want some custom indicators, I highly recommend reach out to Zip, Atkins Indicators, and he can code something up. Very reasonable. He'll give you the C++ code so you can compile it yourself. Just look on his forum for pricing. But he is a good man. I know him well, and I love him like a brother. He's a good guy. But everything on my chart is all standard, all of it. And then I also recommend for chart books that have the functionality that are pre-made of many custom chart books, Ticino Trader. Ticino Trader. He's awesome. He is a Sierra chart master. He understands stuff Sierra chart so far beyond me, and he only charges like $5 or $6, and you get access to essentially hundreds of pre-made chart books, and you can go download them all. I mean, it's mind-blowing that he doesn't have every single person who using Sierra chart subscribing to him for $5 or $6. It's like you want correlation charts, you want VIX charts, you want order flow charts. It's all pre-made. You don't have to even watch my videos. You can just go buy his stuff for $5 or $6 a month. Like, that's coffee. Can you afford to drive your car a little longer one day? Can you afford to get a Starbucks? Crappy coffee, by the way. But, that's nothing. But people don't think it's valuable because he charges so little. But it is incredibly valuable. I can't even begin to tell you how valuable his stuff is. Right? And where people don't understand it's valuable is it because he doesn't give you all of the information on how to use it. But he does have courses. And I know Ticino, he's another good man. and a great trader.
The US, China, maybe
But
Russia was
it's not flashy. Not like a lot of these other guys who probably took a lot of their stuff from these guys. Because these guys have been around a decade or more using Sierra Chart. That's where most people got their ideas. Not everybody, but a lot of people. So I just can't recommend those two individuals enough. And I'm not affiliated with either of them. I make no money off of them. That's my honest, unfiltered opinion, is that they have products that are just incredible, right? So anyway, take it or leave it. It's your loss, but that's who I recommend. But no custom anything online. Let's see. Bearish Bull, I appreciate it. I'm on Twitter. Yes, I am on Twitter. Yeah, I've been posting a little bit on Twitter here and there. Man, back in 2020, from March on, I was posting 30 times a day on Twitter, giving signals, all kinds of stuff. And then I kind of did what I did with the Discord. It's like, it's all too much. I gotta focus on things. I'm a social person. That's why I kind of do this sort of thing. And I keep in contact with traders, but I'm apt sometimes to simplify my life because the social aspect of trading overwhelms me a bit from time to time. But as I get older, I'm starting to, and I've got newborns and kids. I'm just like, nope, not going to infringe on family life. And my wife is my best friend, so she's awesome. She's amazing to hang out with, but she's typically at home when I am, and I trade from home, so we see each other a lot, and it's great. But with kids, everything becomes a little more challenging. So anyway, back to these questions. I'm probably missing something. What is the best learning path? The best learning path, Charles, is going to be dependent on the individual and what you know. But read books. Read good books that pack a lot of information, accurate information, that have verified good material. So I recommend Adam Grimes, Adam, and then Grimes, Adam Grimes, Art and Science of Technical Analysis. Read it a bunch of times. Okay. You like market profile, you want to get a good idea about the auction, go read Jim Dalton's stuff, right? I have those books. Here we go, 1210, little sell. A little bit of intense selling here. Pushing price down. Finding those retail stops. Looks like maybe some news. Maybe? I don't know. Let's see. So that's good. Also, I'm a huge fan of there we go. Big sweeps. Could see it on the tape. I'm a big fan of classical charting patterns, but like broader market theory, right? Why do prices go up and down? Supply, demand. So technical analysis of stock trends. There's like 11 or 12 editions out there, written originally I think in 1929 or something, but it's been updated for current markets and stuff. Why? Because it's like the Bible of classical charting patterns, and it's a great book. Edwards and Meiji, right? So go read that 4 or 5 times. And after you've read those books, when you come across people on YouTube, you're going to sniff out the ones that actually know something from the ones that don't. I mean, right away you'll be like, this guy's just trying to sell me a load of horse manure, right? Hey, volume down here, covering. They're covering. All right. They are covering into 79. They'll probably cover new lows too. Remember that was that area, that breakout zone? low volume here, right? Low volume on the volume profile. Look at all that liquidity sitting there going, I'll buy that. Bid it. Bid it up. Where do you find, here's a question, where do you find the most liquidity? Breakouts, new lows, new highs. What do institutions need? New lows, new highs, break of structures. That's why the E-mini is so good at finding stops, because that's where the liquidity is. If you can flip your thinking on new lows, new highs, you can scalp really well. All right, there you go. We're going to go further. Right? Now we got this whole breakout that we came back to earlier. Double top action up here. Uh-oh. I think we range out, likely, looking at my 5-minute chart. But we'll see. Here, let me go back to questions. So best learning path, I think it's, for me, it's reading books. Because, you know, with books, so let's say I tell you, hey, everything's free. Go to YouTube. Find people who have some good content. How do you know what's good? What, I told you? You've got to learn for yourself. Right? What, it's kind of like saying, who's the best doctor? Do you like prescriptions, or do you want to try to heal yourself maybe through a diet? Do you need surgery? Right? Depends on the condition of the patient. Building volume, new lows. They get a cover here. The big boys get a cover right here. It's nice and slow. See that? All the breakout traders. I want a short. I want a short. I want a short. Look at all this thin volume here. Look at that. You see that? Super thin. These it tends to get filled back in. So you see that on the book, 270 contracts, scaring all of you guys to get out, because they want to cover here. So liquidity on the book. So what effect does this have, all this liquidity? Yeah, they bought here, but they want to buy more to cover out of their position. If you go and you hit that, they're fine with that. It's de-risking. But they're not going to try to aggressively buy here. If they buy too aggressively here, the market's going to come back. They want it to come down. If you got to think, if you were a really, really big player and you had a whole bunch of contracts to cover, how would you do it? You don't just buy in a straight line. No. Yeah. Passively buy, passively buy. That's why looking at a footprint with volume is so amazing to look at, because what? We see there's interest, what? After new lows. See that? After new lows. So if you want to be a counter trend, I just said it a few minutes ago. If you want to be a counter trend scalper, there's your tip of the day. Scalp new lows. Question is, how do you put on risk here? How do you define it? What? Below this area? So what, here? So let's say you buy into new lows. So your stop is below volume. So you buy into new lows. Can you get out 1R trade? 1R is here. Can you get out? I mean, 5 contracts transacted up here, guys. You're not out. At all. Not yet. Not for 1R. But can you get out at 0.9R? Can you win more than 60% of the time? Maybe, maybe not. I don't know. Depends how good you guys are at identifying. Now you're out for 1R. All right, so where's the 5-point range here? Let's see. So much to talk about with trading. Ding. I don't know, somewhere in here. Are you going to get out? Look at all this low volume. See that? Crazy low volume. This orange is like 100% delta, or 95% or higher. You see how we're building volume? You could have taken a long right there if you want to scalp 3 ticks. Maybe you get out here at 82.25, maybe you don't. But when you see volume building short term into an area, whoop, you can try to get out for a 2, 3 tick scalp. There's people who play like that. Depends on your personality. Do you like to hold for a few seconds? You want to hold for half a day? You want to hold for 5 minutes? Right? What's your strong suit? Anyway. All right, back to the questions here. Let's go delete this. Enough of my sideways ranting here. Saberfly and a 3-year-old. Too much. Congratulations. It is it's work, isn't it? Hoy caramba. No, Ticino's amazing, not just good. He is. He's the most valuable player. One of them. Him and Akin. Zip. Akin's Indicators. So Akin and Zip are two different people, but at the their forum, if you search like Akin's Indicators, we'll probably find like Zip forum, a freelance whatever coder or something. Right, so they're two people, but they shared the same username on Sierra Chart support board for a long time. So it's confusing. But yeah, let's go fill it in. All those 100% deltas. You see that they're bright orange. Those are 100% deltas. They typically occur at breakdown points or breakout points. Here we go. Weak, weak. So you see what has to happen for these big guys to get in and out? New lows. Oh, now it's retracing all. You start breaking, shorting new lows, swing lows, you're going to get rocked in this market repeatedly. It's not how you play. Not if you want to play with big money. It ain't how it works. But people are taught. Sell breakouts, buy breakouts. Context is important. Look here. Sideways, sideways, sideways. 20 and 10 SMA triggers. Bing! So the market, look, the market moved away from the 10 SMA, sideways, sideways, rode the 10 SMA, bing, not enough time, 20 SMA, bing, timing. Market then rips. See that? Sideways, sideways. We're looking here. Sideways, sideways, sideways. Tried, fail. But higher resistance area, right? We identified this with the 30-minute chart already. So bigger context keeps you out, right? And then we saw this move, right? Running out of steam. 1, 2, 3. Running out of steam, right? Big extension off of big balance. Sideways, up, sideways. Not enough sideways. And then boom, up. And then what? Pullback. So, context. If you want the market to explode to the upside, you need consolidation. Why? Consolidation traps traders. Right? It'll trap either the shorts or the longs. Depends on which way it breaks out. So you need consolidation. Or you need an extraordinary amount of volume in a short amount of time. And then you have trap traders. Why do you think lows happen quick? Because when people capitulate, they do an extraordinary amount of volume in a short amount of time, trapping traders. A lot of lows don't tend to have huge consolidative bottoms unless it's happening on low volume, because they got to get their fills. Once they get their fills, then they can buy against all the dummies. It's just how it works. If you're big money, you need the dummies. And yeah, that assumes a lot of things. You know, not all big money are winners, but typically that's a good way to view the market just in general. Markets are more complex than that, but you can still kind of use those principles for success. Let's see. I think I got everybody's questions. Cool. Anyway, 2 hours, 25 minutes. Last 30 minutes, I might trade it today. Have a good one, people. I hope you enjoyed the stream. Please like, subscribe, share the stream. The more popular it gets, the more excitement I feel to come on and interact with all of you guys. Sorry, I'm not really addressing comments very fast today because this OBS thing is kind of broken, but I'll fix it and do better next time. So anyway, have a really good closing 40 minutes here. I hope to. Take it easy.